Welcome to the DebtCircle podcast, brought to you on August 13th, 2026. I'm Vijendra.
And I'm Leela. Today we have some significant updates from the financial and renewable sectors. We'll cover India's 35 billion US dollar renewable energy funding gap, Embassy REIT's index inclusion, MCX's proposed mineral spot exchange, Gift City's growing global role, and several major developments across banking, debt, and investment markets.
Let's begin with renewable energy. India faces an annual funding shortfall of approximately 35 billion US dollars to meet its target of 500 gigawatts of renewable capacity by 2030. The country needs annual investments of around 48 to 54 billion US dollars, but is currently receiving only 13 to 18 billion dollars.
That gap highlights the urgency for alternative financing. Infrastructure investment trusts, or InvITs, could recycle capital from existing renewable assets. Private developers currently hold over 90% of renewable capacity, yet only around 2% of renewable assets are monetized through this route. Solar presents an especially large opportunity.
India has around 165 gigawatts of installed solar capacity, but only about 3 gigawatts have been monetized through InvITs. That means potentially around 3 lakh 1,000 crore rupees of solar assets could be unlocked, attracting institutional investors with cash yields of around 10%. India also needs roughly 48 to 54 billion US dollars annually to add 50 gigawatts of renewable capacity each year until 2030.
Exactly. With current investment of only 13 to 18 billion dollars a year, the funding gap remains substantial. Expanding InvITs could attract pension funds and insurers, reduce India's reliance on costly bank loans, which are currently around 80% more expensive than in mature markets, and accelerate renewable expansion and the country's transition toward its 500 gigawatt target.
Moving to real estate, Embassy Office Parks REIT will join the Nifty 500 and Nifty Midcap 150 indices from September 30th, 2026. It will be the only real estate investment trust in the Nifty Midcap 150 and will be tracked by multiple exchange traded funds.
That inclusion could significantly improve market visibility and liquidity, attracting both institutional and retail investors. Embassy REIT manages more than 52 million square feet of office space across major cities including Bengaluru and Mumbai, strengthening its position in Asia's office real estate sector.
Financially, Embassy REIT reported 17% year on year revenue growth in the June quarter, along with 17% growth in net operating income, while EBITDA reached 978 crore rupees. As liquidity increases, the REIT could potentially attract additional capital inflows from diversified investor segments.
Now to commodities. Multi Commodity Exchange of India Limited has received SEBI approval to invest up to 100 crore rupees in a new mineral spot exchange. The exchange will initially be fully owned by MCX and is intended to create a transparent digital marketplace for mineral trading while supporting the government's objective of standardizing mineral pricing.
MCX's experience in governance and settlement could strengthen market integrity in a sector that has historically lacked uniform pricing mechanisms. The proposed entity could be called MCX Mineral Exchange of India Limited. It would initially be 100% MCX owned, with shares issued at 10 rupees each, although incorporation and a license from the Indian Bureau of Mines are still required.
Once licensed, the platform could establish a benchmark for mineral trading infrastructure by introducing technology-driven physical delivery and clearer price discovery. At the same time, Gift City is emerging as another important financial gateway. The International Financial Services Centers Authority's unified regulatory framework is replacing multiple domestic regulators, streamlining processes for global funds, aircraft leasing, and fintech companies.
The streamlined framework can reduce bureaucratic hurdles and attract international banks involved in cross-border trade and treasury operations, strengthening India's integration into the global financial ecosystem. IFSCA is also focusing on green finance and fintech innovation, including green bond frameworks aligned with ESG criteria and sandbox environments where fintech companies can test products before full-scale launch.
These initiatives support India's ambition of becoming a 5 trillion US dollar economy by 2027 while addressing rising demand for infrastructure funding and greater capital efficiency. Another infrastructure market development is NDR InvIT Trust, which has filed a draft red herring prospectus with SEBI for a 750 crore rupee IPO.
The NDR InvIT IPO includes a fresh issue of 450 crore rupees and an offer for sale of 300 crore rupees by Investcorp India Warehousing IFSC Trust. The proposed listing on both the National Stock Exchange and Bombay Stock Exchange would broaden investor access and liquidity.
The fresh issue proceeds will fund acquisitions, including the full acquisition of NDR Advanced Storage for nearly 300 crore rupees and NDR Storewell Warehousing for more than 80 crore rupees. NDR already has nearly 23 million square feet under management, although rising expenses have weighed on profits despite strong revenue momentum.
In financial services, Bank of America plans to acquire up to 49.9% of GeoCredit for up to 18,268 crore rupees. It will initially acquire 26.5% through preferential shares, with the possibility of increasing its stake through warrants.
GeoCredit had assets under management of around 30,667 crore rupees as of June 30th, 2026. Geo will retain management control and the company will continue as a subsidiary consolidated within Geo Financial Services accounts. Equal board representation is planned, combining Geo's domestic reach with Bank of America's technology and risk management capabilities, with the broader objective of making credit more accessible and affordable.
Astral Limited also reported a strong first quarter. Net profit surged 52% to 120 crore rupees, beating estimates, while revenue increased 15.9% to 1,578 crore rupees. The plumbing segment remained resilient despite industry challenges, with flat volume growth but margins improving to 18.9%.
Paints and adhesives also gained momentum, with segment revenue increasing 29.5%. Adhesives India is targeting 15 to 20% growth and a 15% EBITDA margin, while international adhesives recorded 26% growth. Capacity expansions, a new CPVC resin plant, and specialty chemical acquisitions support Astral's 20 to 25% annual growth guidance.
Turning to inflation and currency developments, the government has approved 1 billion polymer banknotes, each of 10 and 20 rupees, for field trials following the RBI's proposal. These notes will circulate alongside paper currency, although the timeline and cost of a wider rollout remain uncertain. Polymer notes could offer greater durability and security, and potentially reduce currency replacement costs.
Meanwhile, retail inflation declined from 5.4% in 2023-24 to 2.1% in 2025-26, but increased to 3.9% in the first quarter of 2026-27, partly because of global energy prices. Fiscal measures, including rationalized customs duties and lower fuel excise, are aimed at stabilizing prices, while consumption grew 6.8% in 2025-26.
Venture capital is also active. Mirai Asset Venture Investments India raised 1,125 crore rupees in the first close of its second India-focused fund, targeting early growth companies in AI, deep tech, advanced manufacturing, and software platforms. The fund targets a total corpus of 1,800 crore rupees, with a green shoe option of 700 crore rupees, mainly backed by the Unicorn Growth Fund involving Crafton Incorporated and Naver Corporation.
In foreign currency markets, the RBI's concessional forex swap, launched in June 2023, caps hedging costs at 1.5% per annum for PSU overseas borrowing. However, rising US Treasury yields and crowded markets have nearly erased that advantage. The 10-year US Treasury yield climbed 65 basis points to 4.68%, pushing effective dollar borrowing costs to around 7.2%, close to domestic bond yields of 7.28 to 7.30%.
Indian banks raised 36.73 billion US dollars through FCNR deposits by July end, with that figure expected to reach around $90 billion by September. Spreads have risen to 110 to 130 basis points over US yields, leading PSU issuers to favor domestic bonds or term loans. Central Bank of India alone raised 250 million US dollars through its FCNRB window against a July target of $100 million and is targeting $400 million by September 30th. FCNRB rates stand at 6.50% for 3 years and 6.60% for 5 years.
RBI data showed FCNRB deposits at 36.725 billion US dollars, with total inflows since June 8th reaching $40.816 billion by July 31st. This momentum is supporting India's foreign exchange reserves through September's swap window deadline. At the same time, Nomura downgraded Lloyds Metals and Energy from buy to neutral and reduced its target price by around 5% to 1,950 rupees, citing commodity price revisions, copper asset challenges, and cost pressures from the West Asia crisis.
And finally, the digital payments lending story. The company announced on December 6th that it was cutting personal loans below 50,000 rupees because of tighter RBI lending rules. Its shares fell around 12% initially, followed by another sharp 20% fall the next day. SEBI issued a show cause notice to the CEO and CFO on December 5th regarding the timing of the loan reduction, giving them 14 days to respond with possible fines or restrictions.
Despite the regulatory scrutiny, the company expects no financial impact and has emphasized compliance. Overall, today's developments show how closely India's financial markets are connected, from renewable energy funding and REITs to infrastructure, banking, foreign currency borrowing, inflation, gold loans, and government bonds. That's a wrap of today's The Debt Circle podcast. Thanks for joining us and stay tuned for more market updates.